All right, I'm gonna do a quick video here. 12/5, is it 12/5? December 5th, 2021. So again, if the market right now, we're a little oversold. If you look at the IWO, Russell 2000 growth is down roughly 15% in the last 19 days, okay? This is, pretty significant, okay? This thing has been trading in the range for a while. If you do not own any index ETF, my suggestion is that you take a look at the YouTube video that I posted in the room, holding core ETFs as core holdings. If that makes sense to you, then this is now the time when you want to consider, if you don't own any of these index ETFs, this is when you want to consider owning some. Okay, there are a lot of benefits to doing that. I like doing it when they're down a lot, down 15, 20, whatever the case may be. Like, for example, I bought some here when it was down 16% from the 52-week high. So that's my number one consideration, okay? Number two, as far as the market is concerned, when the market goes into a correction zone, if you look at some of my old videos, which I'm going to post today in the room, I start looking at the indices a little bit more, and I start looking at the 30-minute charts, okay? And, here with these short-term averages where we have the 5-day, the 10-day, whatever the case may be. And what happens is that when the market finally breaks down, you'll notice on these 30-minute charts that these moving averages, they tend to act as support for a long time. And then once the trend changes, like it did right over here, then they tend to act as resistance. And normally when you have a downtrending market like this, what you tend to see is, number one, you see a pattern of lower highs and lower lows, which we're seeing right now here, 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 and possibly somewhere around here. And then finally, pretty much almost at the end, if it's a real sell-off, you see that you'll see an inverse head and shoulders pattern. We haven't seen that yet. That normally that head is a panic low, and then you go back and forth. Then you're going to start to notice the moving averages start to flatten out, and then you'll see price get above. If that happens, where the moving averages here start to flatten out and price gets above, then that's when you can, for an oversold bounce, I'm probably going to take one of the triple ETFs. Once we get, like, for example, if you look at here, where we had, it's always a similar situation, right? It's, above for a while. Then here we finally get below it. And then here you have the inverse head and shoulders pattern, left shoulder, head, and here's the right shoulder, okay? And then once we finally got above these averages, we were off to the races. We literally went from 440 once we gapped up all the way to over here. So this is exactly what we're looking for. And when you see, you'll notice that almost every single correction will end like this. For some reason, a 30-minute chart, you'll see a inverse head and shoulders pattern. So this is something that we're looking for. But first, you need to see these averages start to flatten out. You need to see price to get above those averages. But that's what I'm looking for right now. Okay, that's exactly what I'm looking for. So again, to reiterate, if you don't own any of the index ETFs as core holdings, that's something you might want to consider. Watch the video. If the video makes sense to you, then, take a nibble, all right? The time frame is forever, and you start small, 2.5%. It goes down a little bit more, you buy a little bit more. Before you actually put on the trade, have a plan of what are you looking to do. Am I looking to buy the IWO or the IWM, and I'm looking to get it up to 10% of what I have? That's the way you want to think about it. Okay, the average inter-year decline for the S&P 500 since 1980 is roughly 15%. For any of these other little sectors, IWM, IWO, it's a little bit more, but it's a 15% drawdown that we had in 15 days, right? So if I didn't have any, I would feel comfortable buying some here, starting with a 2.5% position. It goes down another 10%. I'm going to add to it. That's the way I would look at it, right? So trade them well and be well.